Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about IEX. So this stock has been into the limelight recently because market coupling was a mechanism which was introduced or which is going to be introduced by the regulator in this sector. And the decade-old monopoly of IEX is in question now. So we'll talk about in detail about this issue in this video. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. This is a small disclaimer as per SEBI regulations. You can pause the video and read it. This will be the flow of our discussion. We'll talk about the business model of IEX in brief. We'll see how the stock has performed in the last few years. We'll understand the financial performance of the company, the reasons for the correction in the stock price, the outlook of the management going forward, the valuations of the stock at present, the risks of investing in this business, and then form an overall view. So I'll explain the business model of IEX before we go ahead with discussing this issue. So IEX is like a marketplace. The way Amazon and Flipkart are marketplaces to buy and sell different goods, IEX is a marketplace to buy and sell electricity. So various market participants like the discoms, various industries, the power producers are generally the participants on this exchange, and they buy and sell electricity in different time frames and contracts. Other than the trading in electricity, there are other products like green energy certificates that are also traded on the exchange. This company works under the rules and regulations of the Power Authority, and more than 8,500 participants are presently listed on the exchange. In terms of volumes, they've crossed 100 BU volumes recently. Now, these are the different products which are offered by the exchange depending on the needs and requirements of their customers or participants. The DAM, which is day-ahead market, where if you buy today, you have to deliver the electricity by tomorrow. Green DAM, which is a green energy, high price DAM. Real-time market, where you have to deliver the electricity on the same day within a few hours. Term ahead market, and different certificates like RECs and SCERTs. At present, IEX has more than 95% market share in DAM and RTM. So this dominance of IEX is being challenged by market coupling. For this company, there are different revenue streams. Maximum revenue comes from transaction fees, which is a small cut in each and every buy-sell transaction which happens. Then there is annual subscription, admission fees, and processing fees. There are certain group companies under IEX, the Indian Gas Exchange, where IEX holds nearly 47% stake. International Carbon Exchange, which is a wholly owned subsidiary of IEX. Now, why is there a requirement of an exchange like IEX, first of all? And why are people keen to do business on IEX? Because of high volume and transparency, the price discovery is very easy and transparent and efficient. There are different products for different participants as per their needs. And when you're buying and selling something, security of your money is very important. So that trust people have on IEX. If you look at the product-wise revenue, the day-ahead market, this is DAM, constitutes about 33%, RTM 34%. So the market coupling is starting with DAM, which is 33% right now. And RTM market coupling will happen in the future. Then other products like the green certificates, the TAM and DAC constitute the remaining part of the revenue. If you look at the fees, as we discussed, transaction fee constitutes the maximum, which is close to 70 to 80% of their revenue. And other income comes from the other treasury income because it's a cash-rich company which has excess cash. Now, when you look at the chart for the last few years, it's a very interesting pattern, but it is in a long-term consolidation range if you observe. Post-COVID, it gave a rally up to 320 rupees and then corrected sharply to almost 116. So I would say it became nearly 1/3. So such kind of volatility in a stock is exciting, but quite dangerous from an investing point of view. Then another rally went up to almost 250. Then the third rally went again above 200. So the fall in the first rally was because of excess valuations. At that point of time, the valuations became more than 100p. And the last leg of the fall, which was in 2025, was because of the market coupling. And right now, it is again back to its base, which is around 100 to 125 range, where it is taking support. And it has a very strong support in the last 3-4 years in this range. Now, if you look at the financials in the last 5 years, the revenue has gone up from 300 crores to 535 crores. So there has been a decent growth in revenue, but that's not very impressive. In the last 5 years, the average growth in the revenue is about 15% CAGR, which is okay. EBITDA has gone up from 250 crores to 455 crores in the last 5 years, and margins have been more or less stable at around 85-86%. Now, the question of margin sustainability also comes into the mind post-market coupling. As their competitors will try to make the market more efficient, reduce their transaction fees, etc. At the same time, IEX will try to improve their service, technology, and other aspects and try to maintain the same margin. There's no promoter holding in the company because it's a professionally run business, and cash flow conversion is excellent as 100% EBITDA in the last 5 years average has got converted into operating cash flows. It's a debt-free company. Now, why the stock has fallen in the recent times, that is in 2025. So the regulator has come up with a new guideline that instead of discovering prices individually on each and every power exchange, we'll have a common platform where the prices of electricity traded is decided. So this will make the market as a whole very efficient. Everybody will have the same transparent pricing, and in turn, it is good for the buyers and sellers. Now, what is the problem for the exchanges then? The smaller exchanges which did not have volume till now will feel happy because the price is the same everywhere, and there is a chance that the buyers and sellers will now come to them also. But for IEX, which had an edge because of the high volumes happening, now will have a disadvantage because the buyers and sellers will not be very keen to come to only IEX now. So they have a risk of losing market share, they have a risk of lower volumes, they have a risk of lower margins. This is what the concern is. Now, when is this going to get rolled out? This will start in Jan 2026. And this will not start for all the products altogether. It will start with first the DAM, but DAM is the highest revenue generator for IEX. The other exchanges like HPX, PXIL may stand to benefit through this regulation. Now, when this news was out, all the analysts who were tracking IEX immediately started downgrading the stock, and the stock fell by hitting lower circuits. Their concern is the dominance or the moat which IEX had over the last couple of decades is now being challenged. Now, what is my view on this aspect? So there are both reasons for headwinds and tailwinds in this company. The tailwinds are because the electricity consumption in India will grow steadily at about 6% every year till 2032. So the sectoral tailwinds will still exist, which will help companies like IEX to grow. People would continue to convert from physical trading to electronic trading, buying and selling of electricity. So this is also a long-term tailwind which will continue. The company will continue launching new products, new technologies, make things more efficient and transparent, and they will also continue to get more and more business every year. So these could be the possible reasons for the steady growth in the company going forward. Now, what will be the factors creating headwinds for them? Market coupling will create headwinds. Why? Because the buyer or seller will not be very keen to do business only on IEX. The same price will be available on other exchanges as well. Not everybody would shift, but there is a chance that some of them shift to other exchanges. So the volumes on IEX may go down. Generally, for companies like IEX, the costs are nearly fixed as it's a platform business. So when the volumes and the sales drop, the margins also may be compromised to a certain extent. The extent of impact of these things is very difficult for anybody to predict, and we will eventually discover. In fact, the management of the company also will not be able to tell you the exact impact of this regulation. But eventually, as it is implemented, things will be clear as to how much impact it is actually happening. To give you an example, there is almost same price of shares available on both BSE and NSE. But still, due to higher volumes and higher efficiency, people still prefer NSE as their larger quantities orders get executed quite swiftly in NSE. So there could be a possibility that even after market coupling, majority of the users still prefer IEX. There is a high possibility of that. Before we move forward, if you are not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. It's a free channel. Every day morning, I share my views on the market. I share lots of important news and views. More than 7,000 people are daily in touch with me on my Telegram channel. What is the growth outlook of the management going forward? They are not giving any fixed revenue or margin guidance. As I said, they themselves are not very clear. But there are sectoral tailwinds. India's power demand will continue to grow. The government is pushing on the BESS, which will increase the trading volumes. The REC market is now becoming active and the volumes are growing. The green RTM and these new renewable energy products bring in new opportunities for companies like IEX. The market coupling will be implemented in a phased manner from Jan 2026. So FY26 will not have a major impact of that. And post this introduction also, the leadership in technology and efficiency of IEX will remain their edge. The coupling will not be implemented altogether. It will be implemented in a phased manner for one by one product. And as the technology of the new coupling is not ready yet, there may be possible delays in the introduction of this also. Now, what are the valuations of the company? At one point of time in 2021, or the valuations were as high as 100 PE, which cooled off to again 40 times and traded around 40 times multiple for a very long time. But because of the market coupling, the So stock has got further derated, and right now it trades at around 27 times earnings, 10 times the price to book, nearly 20 times EV EBITDA, and nearly 20 times market cap to sales. So I would say that the valuations are more or less now normalized, and the PE derating has already happened to discount this particular market coupling news. So the worst in terms of valuations are over, provided this 15% growth which the company has been doing continues to happen in going forward also. But if there is degrowth happening, then the valuations may get further derated also. Now, what are the risks of investing in this business? The biggest risk is the regulatory risk, which is now what the company is experiencing. If they are unable to upgrade their technology time to time, that could be a big risk. Valuation derating if there is no growth is a possibility. Competition from the peers as they ramp up their technology in volumes. And all these things will remain as a overhang on the stock price for these investors. So now, after understanding the issue, what is happening with the IEX and all the financials, growth plans, valuations, what is our overall view on the stock? So if you are an existing shareholder and you have not sold at the top, the stock technically is near its support zone now. So there is limited downside expected from the current zones unless there is a massive degrowth shown by the company going forward. But the stock may remain in consolidation for a long period of time until the clarity emerges with respect to what is the impact of market coupling on the business of this company. If you're looking at a fresh entry in the stock, it depends on how patient you are as an investor. If you're looking at the next 6 months to 1 year returns, this is not the stock for you because it may remain in a consolidation mode for a long period of time. But if you're looking at a 5 to 10 year horizon, and if you're okay with the stock price doesn't move for the next couple of years, then the stock is suitable for you for a fresh entry at these levels. Because FY26 and FY27 will be a mixed years for this company. There will be certain growth because of some reasons we discussed, and some headwinds on the stock will cause degrowth. So overall FY26-27 could be flattish or muted growth years for this company. So that's my view on IEX. I hope you like the video. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Do join our Telegram channel. Thank you for watching and have a wonderful day.